Let's go across to Milan Bavishi. He's head of commodity research in venture growth and securities, and he joins us in Mumbai studios. Milan, hi, welcome to the show. Let's start with crude prices first, and that really has been a major performer in last 1 week. Gained 5% in the previous week. We've seen levels like 99.60 being hit today. How far are we from 100?
See, basically what crude has done in last few days is it has rallied strongly from $75 to now almost $99.6. Now, anything between $99 and $100 is a strong technical as well as psychological resistance for crude. Crude could face selling pressure from here, but at this juncture, I would rather watch out and see if crude is giving confirmation either on upside or downside before suggesting any trade. However, positional long traders can lighten their commitment at this level.
How about the copper prices, Milan? Because that is one space that saw some gains coming in the last week, but today again we've seen some profit taking come across. We've seen the dollar index gain up yet again, and markets really have been digesting that Eurozone issues as well.
See, basically the change in government in Eurozone, basically only in Italy as well as in Greece, has improved actually the overall sentiment. Now hopes are being built that the Eurozone crisis will not worsen from here. Now this has boosted actually copper, and I would rather buy copper on declines at around 388 levels, place a stop loss at 382, and one can trade for the targets of 400.
How about the precious metals then, Milan? Because, that is one area which started in the Asian markets quite on the positive side. If you look at the gold prices, the day started with 1793 kind of levels. We are nearly $10 off from the day's high. And if you look at the silver prices also, those are trading in the red as well. Starting with gold first, would you rather buy at these dips?
See, although dollar index is up today, but we are expecting some kind of correction to come in dollar index. And because of this, gold prices could rise. One can buy gold in this correction for the targets of 29,350 on MCX and place a stop loss at around 28,700 levels.
How about silver?
Yeah, silver would actually outperform gold in this rally. One can buy silver for the targets of 58,700, place a stop loss at 57,200. See, I would like, for gold and silver, I would like to mention that gold would face significant selling pressure at around $1,830 on COMEX. So if there is a positional trader who is holding long positions, whenever COMEX gold reaches $1,830, it is advised that long positions should be lightened. Same way in silver, at around $36.50 on COMEX is a good level to book profits in long gold positions, long silver positions, sorry.
Milan, the way the markets have been in the recent days, one day of good news and one day of bad news, people have been losing money on both sides. Holding long-term positions, do you think that's advisable in any of these commodities, or would you rather again trade day-to-day basis?
It depends on the trader. It depends on the risk appetite basically, but for gold and silver, I would rather keep long positions till 1830 on gold is reached and 36.5 on silver is reached on COMEX.
One final word, and this one on crude, Milan, before we let you go. The crude prices have run up quite strongly, and many people say that the last $5 of a gain from $95 to above 99, the kind of levels we saw yesterday, was purely technical and the commodity may be overbought. How would you read it?
Yeah, that's right. It could have been overbought. That's why I suggested that a long trader could book profits here. But for particular trade, a fresh trade, I would rather wait for a confirmation either on upside or downside. If crude corrects from here, we would see the levels of $94. If 101 is crossed, it would immediately jump to $105.
And finally, how do you read this premium which we have seen narrow down earlier? On October 14th, we saw NYMEX and Brent trading with that gap of around $28, a record high of course, but now it's just about $14 to $15 that it seems to be holding. Would you go with the same strategy, because we've seen the Brent prices come down while the NYMEX prices have gone up?
Yeah, this could further happen, that the gap would narrow down.